Insights was founded on a mission to bring out the best in you and your financial future. Today, we provide a complete education in stock market investing and trading. So whether you are a full-time homemaker or a busy executive, whether you prefer buy and hold for long-term or trade actively for faster return, whether you have experience in this or you are totally new to it, we have the strategy for you.
I started to search online which center in Malaysia can provide me a proper training about investment and trading. That's how I discovered about Beyond Insight.
I like the whole program because, you know, as a creative person, we see pictures. This was a big challenge for me, but Kathlyn made it so easy.
She tells it the way it is. She's very good at explaining. She doesn't make things overly complicated, and it's exactly what anybody needs in terms of a training course.
I like Kathlyn because she is extremely objective in her approach, the way she teaches. She has a unique way of putting all this intimidating stuff into very layman terms for us. It's very easy to understand.
Kathlyn's a no-nonsense, down-to-earth individual who runs a training course, trading and investing. This is where Beyond Insights has fundamentally changed things by pointing out some very basic things that I was getting wrong.
With Beyond Insights, you'll be coached by a team of full-time investors and traders with more than 20 years of combined experience in trading and coaching, led by our chief trainer and coach, Kathlyn Toh herself.
Hello everyone, thank you all for joining us this afternoon. To those of you watching at Malaysia Kini's Facebook page, I'm also watching you guys right now, all 160 of you guys. Now, once again, my name is Amanda Andrea, and I hope all of you guys are doing well and most importantly, staying safe, especially with COVID. Hence us doing this via, our laptops. Everyone is currently staying home staying safe at home, and that is what we are wanting for you guys to please stay safe. Now, as we all know, last year 2020 was such a challenging year. There are optimistic and also pessimistic sides. A roller coaster year most definitely is what I would call it, especially for the global stock market and for all investors. So let's move on from 2020. Okay, we've kicked off the brand new 2021 30 days ago. So 2021 is known as the return year. What should global investors pay attention to? Today, we will talk about A.B.C. What is that? The A.B.C effect on global stock market 2021. This is, of course, specially brought to you by Beyond Insights. So A.B.C is not your favorite ice kacang or any of your Malaysian delicacies, even though it's tea time right now. A represents America, B for Biden, and C, the dreaded word coronavirus. Joining me today on the show is a professional trader who earns her wealth from investing and trading in the U.S. and global equity markets. Let's welcome Ms. Kathlyn Toh, founder, director, and chief trainer of Beyond Insights.
Hi, Amanda, and hi, everyone online. Very happy to have this sharing with all of you, and thank you for Malaysia Kini for inviting me. Thank you.
We're really, really excited to have you, Ms. Kathlyn, but I have to give the audience a little bit of your background. So for those of you watching, we've got a little bit more viewers now. Some background story about Ms. Kathlyn. She started her stock trading journey in the KLSE stock market way back in 1993 and the US stock market in 1997. Since then, she has traded actively in US stocks, options, CFD, and commodity futures. Am I doing all right so far, Ms. Kathlyn?
Yes.
All correct. Okay, that's great. She has considered herself fortunate to have experienced various market conditions throughout the years, which gave her some great experiences in adjusting her strategies according to the situation of the market. Now, to all our viewers, once again, grab this opportunity to ask as many questions as you can in the comment box throughout our live session. Thank you once again, Ms. Kathlyn, for joining us.
Yeah, thank you so much for inviting me. Thanks, Amanda.
So I've already seen some people have already started to ask questions, but we'll get into your questions later on. We do have some questions of our own from Malaysia Kini, and let's dive into our question number one. Can you please give us a review on the performance of the global stock market in 2020, last year?
Okay, very good. So I think it's easier for me to share the results in a graph. Yeah, so let me just share it over here. Yes, hold on.
Yep, no problem.
Yes.
So
this will be the yes. So the actually showing it on my screen here. Can you see that?
Okay, not yet. Wow, we have quite a few people already asking questions, and a few people have commented, love the topic, nice topic, good. Very, very good. Now, guys, we are just waiting for Miss Kathlyn to share her screen, give her a moment or two, but we will be having some pretty interesting questions that we're going to be covering today. There we go. All right, yes. We can see the screen right now. Fantastic.
Yes, so this is actually the 11-year stock market performance that I've consolidated. You see, when we look at the stock market performance, we don't look at a specific year, especially as an investor. We need to be able to look at the longer term picture, right? So 1 year could be up in the stock market, another year could be down. So this is 11 years cycle for the US as well as the Malaysia stock market. I will share in a short while. Okay, so the first line over here, right? This is from January 2010 all the way to the last time I captured is the beginning of this year. You can see the top line here is the US technology sector, right? So this is more layman term. In more technical term is NASDAQ 100, which is the top 100 stocks listed on the NASDAQ stock exchange. So look at performance here is 53.1% on average per year. Okay, on average per year. How many of you would like to have this kind of performance, right? And the next one is the US S&P 500, which is the average of the top 500 stocks like selected to represent the US market, right? Even the top 500 stocks, right, is performing on average of 21.1%. Then I contrast it to the Malaysia, our own Malaysia market here is 2.4%. So if you look at the red line over here, right, this is the Malaysia stock market. You can see that it's actually flattened and slightly down, and recently it's actually quite weak as well. Okay. Of course, I just want to qualify, right? This KLCI index here only represent the 30 stocks in the index, right? So it's not for all the respective stocks in the market. And I also get popular questions for me most of the time is about gold, right? So how about gold? Is gold a good investment? So let me share with you how is gold performance. Gold just performed an average of 5% per year in the entire period. Right. So based on this, you can see that the overall US stock market performance is still the best. And of course, in certain years, certain other countries may perform well, but US so far has the most stable stock market performance. It is not as speculative as other markets like Hong Kong and China. Yeah. So I hope I answer the questions. Yeah.
Wow, that's actually some really interesting facts to see. And I can see that in Malaysia, actually, the KLCI is quite conservative, 2.4%, yeah?
Yeah, it's just barely cover the fixed deposit rate, yeah.
Yeah, definitely, because the fixed deposit is quite low as well. So that's, there's more risk as well involved. Okay, that's very interesting to know. Yeah. Now, the next question, I'm sure for our viewers as well, we've mentioned A.B.C, which is America, Biden, and coronavirus. But I want you, Ms. Kathlyn, to please tell us more in depth on what it is and why do you think these are the 3 key elements that will highly impact the global stock market this year?
Yes, so as all of you would have known, right, the coronavirus is getting worse, right, in the second and third wave. So it's actually affected the overall economy. So stock market, if you want to understand the stock market, there are 2 major drivers here, right? On the fundamental side, it's all about consumer spending, right? So when the consumer spending is good, then the stock market can go up. Because what drives up the stock market is fundamentally company profits, right? I mean, we don't talk about the speculative part of the stock market. But fundamentally, in order for the stocks to go up, the company needs to make more money. And how does the company make more money? Right, is when people spend more money and they buy more goods or services from these companies, right? So right now with the coronavirus, the consumer spending is impacted, but it doesn't mean there's no opportunity in the stock market, right? So there are still companies that are thriving, right, in the technology sector, where there are more demands for working from home, right? More collaboration tools, you need more probably laptops for your staff to work from home. Yeah, but the other sectors that are impacted, like the airline industries, hotel, restaurants, that will be severely impacted, and it may take a long time to recover. So even though there is a vaccine discovery right now and is in the midst of being rolled out, my concern is not everyone will be comfortable to take the vaccine, right? I myself included. And mainly because of the timeline to approve the vaccine is in a very crunch time. And I usually would like it to be tested at least probably for another year or so before I'll be comfortable. And I'm sure there'll be people who think like that. So due to that, it may take another 1 to 2 years to have the confidence from the market to really take that. And when people start to want to travel, so the airline industry will still be affected for quite some time. However, it doesn't mean that there's no opportunity there, mainly because of Biden, right? So the B, okay, the B part of it is Biden is very focused on recovering the economy, and he's very focused on getting the vaccine rolled out. In fact, before he was inaugurated, he already set up the task force, and now he has this goal of, if I'm not mistaken, like 100 millions in 1 month time to roll out to 100 million people. Yeah, in just 1 month time for the vaccine. So with his focus, I think it can be contained faster. It's just whether everyone is confident to take it. And he is actually proposing a $2 trillion stimulus. Yeah. However, that stimulus may have some hurdle when it comes to getting the Republican to approve. It takes a 60 voting member in the Senate, and the Democrats only have 50 votes, right? So it's a tight Senate. We have 50 Republican and 50 Democrats. So, and because the Democrat has won the election, right? So the vice president has 1 vote. So that's 51, okay? Yeah, we still need 10 votes from the Republicans. So we see how many bipartisan members are there. And if this is approved, then it would be very good for the stock market. Yeah, right now, I think the market is on some profit-taking level, partly because of the this GameStop frenzy, and the other reason is because the stimulus is not approved yet. Yeah, so that's the B part. Mm-hmm.
And our C, the coronavirus.
Yeah, the coronavirus. As I mentioned earlier on, is mainly affected by how fast the vaccine can be rolled out. I think the most important country, right, that we need to watch out is basically US, China, and Europe. Okay, as I mentioned earlier, like stock market is mainly affected by consumer spending at a fundamental level, and the largest consumer spender in the world is actually US. Right, US based on the consumer spending is 1/3 of the world. Yeah, so in layman terms means Americans spend 30% of it contribute 30% of the global consumption. So we want the US economy to be doing well, right? Right now, it is still fine. The consumer spending is still fine. The second largest economy is the entire Europe continent as a whole, right? Individual country will be losing out to China, but as a whole. But Europe is not doing well. That's our primary concern. In terms of the Europe recovery, the COVID-19 situation wasn't contained very well there, and is an aging population. Then the third one is China, right? So the good news is at least China is recovering. Yeah. So if US and China can take off due to the focus from Biden, right, to really contain the coronavirus and also to inject stimulus for the economy. And also he's having other stimulus like infrastructure spending, green energy, and also China putting the focus to recover. At least 2 big economies is going to recover. Okay, so that's my take here. And one important aspect for the stock market is the stock market the stock market is 6 to 9 months ahead of the economy. So we cannot look at the what is happening right now to determine whether you want to buy, right? If you look at the the situation right now is pretty dire, right, for the COVID-19 cases. Also, back home here in Malaysia and in the US, it's worse, right? It's the top in the world in terms of COVID-19. So you need to look past that, right? 6 to 9 months, if we foresee a recovery due to the vaccine rollout, then people will invest right now, not when and everything else is that will be too late. Yeah. So that's how I see the COVID situation. But the sad part is those countries that really cannot afford to get the vaccine at the fast rollout. Yeah. So that like the South America and as well as the India and a few more other countries. Yeah. So that's the sad part. Yeah.
Yeah. So economy size is very important because you focus on countries like, continents like Europe, and then you talk about the US and China. So these three are pretty much really important for the entire global stock market to pick up. Is that right?
Yes.
Yeah. Okay. Now I have 2 questions for you. What is a bull market and a bear market?
Okay. Oh, what is a bull and a bear?
What is it? First of all, I'm like thinking like teddy bears. No, it must be like grizzly bear. So tell me a bit more about it.
Interesting. It's actually based on how the bull and bear attack, right? So the bull attack in this way, right? It goes down and push it up, right? So that's why when it goes up, it's a bull market. Whereas the bear attack like this, right? So it put it down. Yeah.
So one is up, one is down.
Yes.
Okay,
yes. The bull is up, right? So it's based on the way the bull attack. Right, with the horn, yeah. Okay. And bear is down. Yeah.
And bear is down. So are we in a bull or bear market generally, overall?
I see that we are in a bull market, yeah. And there's one very, very important aspect. I can see that most people may be worried, right? Especially the stock market has gone up so much. However, I'm confident that the stock market can continue to go up. There may be some volatility in the short term, right? Or some pullback, which is natural. My main confidence comes from money supply, right? There's so much money in the world. Okay, so let me give an example here. The Federal Reserve, right, during the COVID-19 has unveiled $2 trillion stimulus. Okay, then after that, that's from the just like our Bank Negara here, right? So in the US, they have Federal Reserve. So that's called money printing. The second part is the US government at that time, right? Also approved, under Donald Trump, approved $2 trillion stimulus, right? This money is still in the market. And last year, right, there's another 900+ million stimulus. And now Joe Biden is in the process of getting another 2 trillion approved, right? Where is all this money going to go, right? It has to go somewhere, into some asset class. So, and stock market is one of the primary targets for that. And as long as all this money supply is still, in the economy, right, then the confidence of the stock market will be there until a point in time where it gets contracted, right, when they start to take back this money. Yeah, so that part is a bit technical. It's on more on a macroeconomic aspect. Yeah, that means when they start to, and the interest rate is low right now, right? So it's also one of the way to boost up the whole economy. The US interest rate is, in a 0 to 0.5% range, which is very low. So who wants to keep in the bank, right? So Malaysia is low, and even Europe, right, is on the 0 interest rate, and some of the countries are negative interest rate, like Japan. So it's so low interest rate that it doesn't make sense to put in the bank at all, right? Even in Malaysia, right, 2% or less. So, and in fact, you won't be able to cover inflation. So this causes people to think about where to put this investment money. And there's only limited amount of property you can buy. And property is not doing very well because, especially the retail space, right? Yeah, and when the economy is not doing well, property may not be doing so well. Just that the property sector in the US are still doing well, mainly because of a low interest rate. Yeah. So the risk that we need to watch out in when the interest rates start to hike. Yeah, that's where, and also the money supply is contracted. But I don't think it's going to be so soon, not within the next 2 years. Yeah, and at least the Federal Reserve in the US has actually mentioned about that, right? So they don't have urgency to raise interest rate. That creates a lot of confidence. So you look at all the big guys, right? They are looking at all this advantage. During my early days of trading, I don't have this kind of confidence because I don't understand the big picture, right? So I can see where the fear in the market is But once I understand the all this money supply concept, right, is under the macroeconomics, then I have confidence and conviction, and especially when I'm investing in strong fundamental stocks, right? Yeah. Okay.
Now, just now you actually briefly spoke about Biden, and you were very confident when you were talking about, and I think not just you, of course, a lot of people have very positive expectations about him becoming the next president and what he will try to do, whether it's controlling the pandemic or having more stimulus injected to help the economy. Some investors, based on these, actually say that the stock market would see headwinds under the Biden presidency. So what can you explain to the public? What does headwinds mean, and what's your opinion on this? Yeah.
Yes. Good question. Yeah. So just now I mentioned more on the positive side of Biden's, right, which is related to the stimulus. He really want to help the economy. And he also provides stability for the economy compared to Trump, right?
Of course.
I have traded for 27 plus years, and I have not met a president that caused so much volatility to the market. Yeah, so I mean, even myself has a learning curve when it comes to Trump, because of his ad hoc tweeting, and the trade war with China was very erratic. When it started in 2018, when the worst of the tension. So it caused a lot of instability to the market, less predictability. But under Biden, it's more predictable, right? He don't do all this kind of tweeting in the market. And also I think he's doing it. So let me talk about the positive aspect first, right? Then I'll talk about the risk part. Yeah?
No problem.
And compared to Trump, I think he's doing it the right way, right? Trump is going head on with China, right? Creates a lot of tension, and he banned many things from China, right? So he's going to using the hard way. Whereas I see a different approach from Biden, right? Although he's not giving up on the tension with China, he's not removing the tariff that was put on. He want to have time to work on it. And he worked on the collaboration aspect, right? He's on all his allies in the Europe region to negotiate with China, right? To get China to comply with what they wanted, okay? That's one good part about it. The second part is you don't, push down, let's say a too tall building, right? You don't keep raising to be, push the other building down or tear it down to make yourself look higher. So what Biden does is he wants to invest in the U.S. technology sector, U.S. research, so that in the long run, U.S. can compete well with China. I think this is a better approach compared to the tension. But it takes time, right? So I think for the meantime, he will want to make sure that there's ways to slow down China as well, right? So this is one aspect. Then the green energy, I think is good for the world. Yes, that's good for. And he joined back the WHO, right? So which will have a more cohesive effort for the global, all the countries in the world to tackle the COVID-19. Okay, so that's the good part. So what about the risk aspect? The risk aspect will be the tax increase, because you want to reverse back the tax tax reduction that was put in place by Trump. And this will pose a potential risk to the stock market, because it will affect the corporation tax. The reason the stock market was so bullish in 2017 when Donald Trump was elected has a significant part of it to do with the tax cut, right? So it's very easy to look at it, right? So the corporation profit minus tax is your bottom line, right? So if the tax goes down, straight away your earnings go up, and every share is worth more. Right. So if the tax increase, the net profit goes down and every share is worth less. So it has a direct impact to the stock market. So it depends on how fast and how cautious he's going to implement this, right? Will determine how shaky it is. The good news is I don't think he's going to implement it so abruptly, right? He knows the impact to the overall economy if we do it right now. Although he actually wanted to tax more of the richer side, right? So far, he wants to just tackle the COVID-19 first, put a focus there. But I think it's just a matter of time. It will come, and we need to be prepared for that. Yeah. So I would say the number one threat is more on that part. The other one is the deregulation for the banking sector is likely going to be reversed with Biden, right? So probably more policies in place to do a check and balance on the banks as well as the Wall Street guy. Yeah, I think it's still good. One more risk is more on the social media part, right? The all those big tech, Facebook, Google, will have more. They may he doesn't like to have like those big monopolistic behavior in all this company. So they may have to be tear down into smaller company. Yeah. But it's not his. I think that one is not his priority. His priority number one is tackle the COVID-19. Yeah, which is a good thing. That can defer some of the tax cut discussion and also the tension with China for a while. Yeah.
Now, we were talking a little bit about the US-China relations. So I do believe you would foresee, and I mean, the rest of us would definitely know it's going to be an improvement, compared to what Trump did with the US and China relations. Is definitely, I think it can only go up from there.
Yeah, and character-wise, right? They are very, very different personality. I think Biden will take a more diplomatic approach. Doesn't mean he's going to be soft on China, but he won't be as nasty as Trump's approach.
Yes. He won't cut things off and be like, no. So that's what I believe as well. So with this US-China relations that will be improving, can you talk a little bit more on that, on what you foresee when the US and China relations improve in the future, the economy?
I think it's sad to say that the damage is done, and I don't think it can go back to before, honestly.
No.
Yes, and mainly because both will be very cautious about each other right now, and in the old days, right? You say 一山不能藏二虎 in Cantonese, right? Both want to be a world leader, right? Yeah, and so if you look at Xi Jinping character and Donald Trump, right? Both want to be number one. So now with Biden, right? Biden is not the type who strive to be number one. I think he's more the win-win type. Yes, but he's representing America, right? So he wants to make sure that America continue to be competitive, right, versus China. There's a fear. I would say the fear is the one that will affect the future, because Americans will fear that China will take over the world, and we don't know how. When that comes into place, right, they may become being threatened, right? Who knows, right? Because whoever own the economic power, right, is the one that has the control, right? Right now, US is the key economic power because they are the highest consumer spender. So even China has to give face to US, right? Otherwise, who is going to buy all the goods that you produce from China? But if China economy is going to be more self-contained in the future, and it has less dependency, then we don't know what China will do, right? As of now, we may not see it yet, okay? But I would say that they are in a love-hate relationship, right? China need US and US need China. Even though US is the biggest consumer spender, but China is still big, right? If you are a company, you will not want to rule out any big consumer as your customer, right? So on one hand, you know that you're competing. On the other hand, you know that you need them as your customer.
You need to collaborate as well.
You need to collaborate. I wish that they can, despite all this, they can work out some mutual agreement. But I'm sure both will be continuously working on the technology research to outbid each other. So right now it's not just a trade war. It's really a tech war. Yeah, well, what's the future technology? And the other part that's very, very sensitive is the tension in Taiwan. Yeah, so where it can, my worry is, my biggest worry right now is actually, I'm not here to scare everyone, okay?
Yeah.
If Taiwan can become the source of war. Yeah.
Taiwan can become, sorry?
Yeah, Taiwan can be the riskiest aspect that can trigger a war between the tension. Yeah, because China wanted to take back, and see it as one country, but Taiwan doesn't want to be in that space. And there's a lot of tension over there. There's a lot of military, all the China planes flying around right now.
Yes.
US is interfering into that, which China doesn't like, right? So, and both are beefing up the military weapon and so on. So I really hope that won't happen. But I guess in a matter of time, in years to come, this tension is going to be huge. I hope that they're just going to be a tech war, not the real war. Yeah.
No, I'm quite sure it won't be a real war. Fingers crossed. Okay, especially now it's Biden. So like as you've said, he's trying to be more diplomatic.
Yes,
and I think there's something
I hope Biden can stay on for 2 terms, right? At least we'll have more. We'll have more peace. Usually war is ignited by the Republican, not Democrats. So hopefully we have another 8 years of peace. Yeah, minimum.
Fingers crossed that Trump gets impeached so he cannot run his second term. That's what I really hope for here in public. I'm sure you remember this because we're talking about tech wars as well. The fact that Trump was able to pull off and give Huawei such a headache with Google. I think like you said, the damage is really done.
Damage is done. Yeah. I'm sure China doesn't want to feel being a victim in this, where their own companies are not able to produce, right? And there will be definitely a lot of government incentive put in to beef up the whole research so that they can be independent in the future and less reliance on the US. So this is what US doesn't want, right? US doesn't want China government to interfere into all this company. Because it will not be fair for global competition, like what China did on the solar, the incentive, right, can cause a lot of the US company to go bankrupt. However, from China perspective, I don't think they will back down on that. They will continue to pump in money to all these companies. What is not going well right now is all the agreement for the trade one deal is not working out very well. Especially the compliance to the not having the China government to pump in money to all these state-owned enterprise. So I think that one will never go away as long as if Biden still want to pursue that part, that will be tough. But if China and Europe work together, then China will have to give way in some sense. But now China government is actually putting a lot of their officials into all the big companies like Alibaba, Baidu, and so on. Which means they actually want more control rather than complying to US, which is less control. So this tension will be there for a long time. Yeah,
unfortunately. Well, before we continue so far, thank you so much, Ms. Kathlyn, for all these insights. Those of you watching, don't go anywhere. We're still going to continue, but I just wanting to.
I hope it's not too technical for a lot of people.
No, I think we are getting even more viewers actually, and we've got more questions as well. So I'm really, really happy to see that. I don't know if you've got a phone right beside you. You'll be able to see we are having some quite a lot of nice, good questions as well. But so for those of you watching and just wanting to share with you, for all our viewers, Beyond Insight hosts free webinars where you can learn about the 4-step formula for a consistent and accelerated return in the stock market. You can visit their website at beyondinsights.info/MK2021 for more information. There should be, there you go, a QR code as well. Right now, you can scan right there for your free registration. Additionally, you can also follow Beyond Insights on their social media. You can get connected and, of course, most importantly, get some educational content on investing and trading in the stock market. Now, going back to our Q&A session with the lovely Ms. Kathlyn, who has been giving some really important insights. Our next question, Ms. Kathlyn, can you tell us, given that the US is currently battling an extreme number of COVID-19 cases, I know you mentioned earlier that Biden is going to be focusing on tackling the pandemic, as we all know, 100 billion inoculations, that's his target. And then there's the stimulus that he's pumped into the economy. So which one do you think will come first? Where will the focus eventually have to be at like a bit more focus on?
I mean, he has on his inauguration day, right? He also mentioned that his number one priority is the pandemic. So that should be the one. Impeaching Trump wasn't his number one.
Everyone else will do that without him.
Yes, because he's also worried if the Democrat pursue the impeachment, the Republican may give the Democrat a hard time to approve the stimulus. So this is where the risk is. And I'm sure the Republican who is citing Trump will use that as a bargaining power, right? So if you want me to approve the $2 trillion stimulus, then you may have to back down on the impeachment. Yeah. So that may be a gridlock, for some time. And if this, drag on, right, that will actually impact the U.S. economy as well, right? Because a lot of people may, run out of money. Yeah. Okay. And he also wanted to have a nationwide lockdown as proposed by his COVID-19 special task force. And if you do that, at least it will bring down the cases. But in the US is tough. I think they have to tackle it based on vaccine. Lockdown is not a long-term solution, as we've seen it in Malaysia, right? We have lockdown before, and now it's multiple lockdown, and the cases still increase because you cannot get everyone to be compliant. And the worst case is, there's every time there's a lockdown, there's so much business that is going to be affected. I've just seen 2 restaurants shut down, okay, in this region here, in PJ. So more lockdown may not cure it. You may lock down for a while, the case go down, then after a while, the case go up again, and maybe more severe.
Go down.
Yeah,
the cases
didn't
even go down. Yeah.
Yes. So vaccine is the better hope on containing it rather than the lockdown. But US may have no choice but to lock down, and also for Malaysia, mainly because of the hospital capacity just cannot cope, right? So they have to make sure that they don't overwhelm the hospital. Yeah. So once US go into that, they need the stimulus, right? If they cannot have a lockdown and no stimulus to help those small businesses, and more businesses will fail, and that that will be a chain reaction to the stock market. But I do have confidence that this is going to be just temporary, right? The gridlock, we don't know how long it's going to drag, because I have seen this drama for many years. Okay, this Republican and Democrat drama. Eventually, they will still have to approve it because no one wants to be the bad guy, and Trump is no longer there, right? So I'm sure the Republican doesn't want to be the bad guy. Yeah, anyone who don't approve the stimulus is going to become the bad guy. Yeah. So based on that is why the stock market is still not coming down, right? It's primary is the money supply, and also the stimulus will eventually be approved. And after he has tackled this contain this COVID-19, at least to a certain extent, I guess that's when he need to make sure that he has the money to fund it, and that's when the risk of the corporation tax may come in. But I'm sure that he will not do it so drastically. It's not something that people are not prepared for, because this is already announced. As long as he do it more gradually and the implementation plan is exposed ahead of time, that's fine. Yeah.
And it's also, like you said, taxing the richer, not the poorer.
Yes, the richer one.
Yeah.
And I want to express that it's actually very sad. I highly encourage everyone to invest, because based on all this money supply in the world, right, the money printing, it's going to cause the rich to go richer, because majority of the time is the rich who is investing. And you look at it, the economy is doing very badly, but the stock market is doing very well. Right, it doesn't drive, right? I mean, people will say, why is the economy is the stock market going to sustain, right? It's all because there's just too much money supply, and so those who really lose out is those who don't invest, right? Because if you are just employed, let's say, right, there's only certain amount of percentage increment you can get, and based on the COVID-19 right now, some people don't even have a pay, right, or no increment or no bonus. So there's no way you can catch up. In the stock market investment, if you do it properly, right, conservative investing, you invest on great company stocks. Okay, all my investment and trading are on strong companies, not a speculative company. Okay, unless I'm doing a short-term intraday trading, even short-term, right, I like to focus on strong companies, right, unless I'm trading down. Yeah. Okay. You can make about 20% return per annum investing safely, even though you are not an active trader. So that's like 10 times more than the fixed deposit. That's how we can reduce the wealth gap. Otherwise, the wealth gap is going to be getting worse. In fact, Ray Dalio, right, one of the very seasoned fund manager and also a philanthropist, he is very concerned with this wealth gap moving forward. Yeah, the statistic is not looking good.
Thank you for that, Ms. Kathlyn. Now, as we're talking about investing, what should investors or new investors be aware of, this year in 2021? Yeah,
to me, the safest industry is still technology. Yeah, because despite all the lockdown, you still need technology like what we are using right now. Right, we can still do a lot of things using by working from home, Zoom sessions. Right now, we are conducting all our courses. We used to conduct our courses all face to face, and right now it's all delivered online. So when it's safe to conduct face to face again, then we may have some courses on a hybrid model. Right, it's a combination of face to face, and I still miss the face to face time. It's just not safe to run it. And right now, many of our students already get used to face-to-face. In fact, they find the face-to-face more, get used to online, right? They find it much more convenient for them. And so as long as you stick to the technology sector, and of course, not just any technology stocks, right? You need to screen for the good one, then it's okay. Then on top of that is the green stocks, right? Green energy stocks. There's all this hype on the EV. I think EV is the future. Right. It's just that a lot of these stocks valuation is very high. It takes more experience, to invest or to trade on it. Then there's all this. I'm not. My preference is not to buy those stocks that are penalized, like airline and so on. I know some people like, wow, airline is already so much down. Should we invest? Because there are more uncertainty to those industry, and you don't know how long you need to hang on to that. So I rather go for those strong companies that, less uncertainty. I can still make a lot of money right now instead of having a speculation. There are people who ask me, oh, should I buy Genting stock, right? Genting, because now Genting shares slow. If you look at it, it's not just COVID-19. It has been low for a few years. Okay, so do your, they need to do the homework. I would go for those that has less uncertainty right now. And promising future, aligned with the future industry trend. Okay, so let me just give you some examples here. Okay, yeah. So some of the great sector to invest will be the, just hold on. So let me get the, I have a slides here that I prepared earlier, so that I don't miss out any of the company. Also, those retail sector that has strong online presence, right? For example, the Amazon and Etsy, right, is one of them. And if you want to, China is going to be the future economic power. However, investing in China is more risky in terms of direct investment. So I would prefer invest in the ETF, right? Exchange traded fund. For beginners, it's better to use exchange traded fund. And at least you need to learn how to time it or look at the technical analysis to time it, right? Don't buy when it's all-time high. That means to buy a basket of those strong companies that is a strong China company listed in the US or at least in the Hong Kong market as a basket. Don't go for the individual one. Yeah. Those that has a very strong online retail presence. Okay. The other one is you can balance with some more secured company that in good times and bad times, right, they will do well, like the consumer goods, consumer staples. Yeah. So that will balance it. It's not my preference because I'm more active in the market. So I like to go for more high growth stocks and online payment, right? So because many things are online right now. So the online payment industry is the way to go. It's not going to go away anymore. Okay. Yeah. And in fact, those physical payment will suffer. China is going towards the digital currency. So you will find that more and more people is going to just pay online using digital wallet. Yeah.
Yeah.
Those are the main ones. Yeah. But when it comes to biotechnology and healthcare, investing in individual company will be very risky to me because some people asking me, right? Oh, should they invest in all this Pfizer, Moderna, who is coming out with all this vaccine? Is so many companies working on it, right? And there's a price war going around as well.
Yeah.
So instead of doing that, it's better to invest in ETF, right? ETF for biotech. Yeah, rather than the specific company, because you don't know which one will win, but overall there's a demand for it, right? So that's a safe way to do it. Yeah, the exchange traded fund, which is a fund that consists on all these top companies. Yeah, that would be the safest one. So whoever win, as long as the overall demand is up and there's a good profit margin, then you can invest in that. Yeah. Yeah,
definitely.
But if you are more savvy, you learn how to screen it properly. You can get better results. Investing in the direct tech stock yourself. Yeah. Okay.
Okay, so tech basically. That is on what industry that you were talking about. Now, how about when?
Oh, there's one
is the
more which
best
is
time?
related to. I mean, so in tech, right? There are many type of companies. I would say for newbies, it's safer to go for software companies than the semiconductor. Semiconductor is the future, right? Because we need technology. However, there may still be some tech tension, right? Unless you understand the semiconductor industry, then I would say that's a very good sector to invest. But the trade war, the tech war tension will still be there. So you need to know, you need to be more selective, like on which one that's not so affected by the trade war. Yeah. Okay.
Yeah. Now, when is the best time to buy stock? Bila.
You're thinking all time. All the
middle?
time is a good time. It depends.
All the time
on,
is a good time, people.
Depend on your trading style, right? So, okay. So let me share one slide here, which can which will make it easier for people to understand. Okay. Okay. Yeah. So not many people may realize that there are many investing and trading style, right? In terms of timing, it depends on your horizon. Okay. So there is long-term investing, right? So for long-term investing, there are also many ways to do it, right? So my personally is a growth investor, although I do a lot of short-term trading as well. I don't use value investing. Value investing is very conservative, and in the current situation where there's ample money supply, you cannot use the traditional value investing way of value. You will see that all stocks are overvalued. Okay, but if you understand the money supply and you use growth investing methodology that we actually teach, then you will be able to get into a lot of these strong companies, like the tech stocks or this payment gateway. So this is one way. So when it comes to long-term investing, of course, you need to be more patient to make sure that when you buy, the valuation is not too high. Right, so it has its own methodology of how to screen the stocks, how to understand the valuation, and what is the timing to do that. But there's also mid-term to short-term trading, right? So I also do trend trading. In trend trading, what we do is we look for the trend reversal, right? So when it comes down and reverse, then you get in. And if you miss the initial reversal, you can still buy on the pullback, right? So any of these stocks will have some pullback in about 2 weeks to a month. Okay, the long term is going up, right? Let's say Apple or Microsoft, right, is in a longer term uptrend. So when the stocks pull back a bit, then you can go in, right? So it can happen in about 1 to 2 weeks time. Then the other one is short term trading, where you look at the chart and you see a pattern. There's a short term chart, and you can trade from the range, right? What we call support to resistance, or a breakout pattern. So this pattern can exist in within a few days to 2 weeks. And there's something that you can even have an opportunity to buy every day. I like intraday trading as well. So I sit down half an hour at least before the market open. I will observe the patterns before the market start, the previous day charts, right, and the bigger picture. Then I will see any short-term opportunities that I can have, right? So every day I have an opportunity to trade Apple and Microsoft just for a range of, could be $2, can be up to $5 for some strong stock, right? Like Tesla can go in the $10 to $20 range in a day. So I can trade it up or trade it down, right? So when it comes to opportunity, it really depends on your horizon and the skills to do that. Yeah, and the way to choose is really based on what you really want, your personality and your experience level. Yeah, and the returns are of course different, right? So when you go to short-term trading, you can even get 5 to 10% per month. Yeah, which is about so if you take the low end, 5% per month can be 60% per year. But provided you have mastered the skill, right? So I'm not here to advocate that trading is easy. You do need to commit your time. You do need to practice. But if you're willing to put in the effort, then yes. But if you cannot commit so much time to master the trading skill, I would encourage everyone to at least do investing. Investing, you have 1 hour a month. You can still do passive style investing, right? Using ETF at least. Right, you just need to learn the technicalities of the reading the stock chart and reading the fundamentals. You have more time, then you can actually invest in direct stocks. Yeah, so yeah, that's the contrast here. So there's no so-called when is the right time. Right, it depends on which style you're using. Yeah.
Yeah, definitely. Thank you so much for that so far, Ms. Kathlyn. I've learned a lot as well. I'm actually taking some notes as I'm seeing your slides and watching and listening to you speak. Now, we do have quite a few questions, and if you're ready, we'll go on to some Facebook questions. Is that all right? Okay, so the first one that I want to ask you that we did not touch about yet, or well, now is the chance to talk about, is it a good time to invest in cryptocurrency?
Yeah, I do not personally invest in cryptocurrency. It's just my principle because I like to invest in something that I can understand and have in better control in terms of the analysis. Example, in stocks, right? I have traded stocks, options, forex, and futures. Right, cryptocurrencies behave more like the currency trading. I've traded currency for a long time as well. The reason of it is it's just too speculative, right? And the margins are very wide. I'm not saying that you cannot make money from that, right? I think if looking at the stock chart, I do monitor the stock chart because I'm still a trader, okay? But I do not start up an account to do cryptocurrency. I do see that I could have leveraged on the opportunity. I could have made a lot of money from that just by trading the stock chart, yeah? However, I will not suggest people to focus too much on that, right? Because it's another steep learning curve by itself, right? Every instrument has its own learning curve. I'm not saying that you cannot do that, but you just need to master it first. I think if you understand how the instrument works and you have your risk management, if you go for cryptocurrency, you need to invest with the preparation that you may lose everything. All right, so you should not put your entire account into it, a subset of your account. It also depends on yourself, right? Is how important is this basket of money to you, right? So if you have a big account and you want to put in 10% of this, and you know what you are doing, that means you understand cryptocurrency and the integrities for that, yeah? Because there are many con cases on cryptocurrency where your wallet can be gone, right? So you need to make sure that you know how to store it in your personal wallet and protect it, right? There are also exchanges which also have money, the lost coin, yeah. And right now, just because of one tweet from Elon Musk, right, it went up so much. Okay, so that's speculative, right? It is like the GameStop. Okay, that's the part. But from a more predictability, right, perspective, I would say stock market is the way to go. Right, I would highly encourage, if you have not invested or traded before, start with the stock market, because stock market is about companies, right? It's solid companies. So let's say you invest in a company like Microsoft, right? And let's say Microsoft, I put it in a simple term. If for every dollar invested in Microsoft, and Microsoft is making 30 cents for every dollar, right? 33 cents for every dollar, then in 3 years' time, Microsoft will have triple in value. So this is very fundamental. You can study it, right? So, and if you don't, and it's very easy to get in and get out of Microsoft. And there's also you can also invest in a group of tech stock. Whereas for cryptocurrency, what is the fundamental, right? The fundamental is more on supply and demand, right? Is more people buy it, it will go up, right? It's like the GameStop hype right now, right? People can push it up just because there are more demand, and it can sell off. So it goes up and down like that. There's no basis. But I'm confident, right, when I buy a strong fundamental stock, it's just a matter of time. At a certain price, the big funds will want to buy because it is a strong fundamental companies, right? So that's what I would advocate. Yeah, I'm not sure whether that addressed the question. I cannot tell you specific like when to buy and when to sell. You must be prepared to lose everything. Okay, yeah, it's a high risk, high return. Yeah.
Yeah, but like you said, high risk, high return. We have a quick, short technical question from Dr. Rash. Dr. Rash, DJ Rash. Is stock chart technically the same like Forex because he's doing Forex trading?
Yes, the stock chart for stocks and Forex is the same. It's just that when the time frame that you need to look at is different. So for Forex traders, sometimes they look at the minutes chart, right? So when I trade for long term, I would look at the weekly and daily. When I trade for the intraday, that means very short-term trading, I will look at the minute chart. But the way you look at the stock chart is the same. Yeah, just the fundamental part is different. Yeah.
Okay, got it. We have an ETF question, as you've mentioned that a couple of times already. Can you quickly explain ETF to answer this question, which is how to pick the best ETF?
Oh, okay. Actually, to pick the ETF, first you need to pick the industry, right? Yeah. So the first, based on your familiarity with the industry, I always advocate to understand what you do, right? Rather than someone tell you buy this ETF and buy that. And I don't like to spoon feed my student as well, because they become too reliant on me to get in and get out. Then they won't, what am I? I'm not free, right? Yeah. And the market can be very dynamic. First, you need to understand what you're doing. All right. So if by default you don't know what to buy, one way is to buy QQQ. Okay. Yeah. Nasdaq 100 ETF. So let me explain. Apologize. Sometimes I mention some technical terms, right? So ETF stands for Exchange Traded Fund. In the more layman terms, it's just a fund, just like any unit trust fund in Malaysia, right? Where the public can invest some money into the fund, and then there's some fund manager to invest for you, right? So the difference in this case, why is it? It's just a fund. But why is it called exchange traded? Exchange traded means it's listed in stock exchange, so you can buy and sell this fund yourself without going through a unit trust agent, right? So let's say you want to buy the 500 stocks, right, in the US market as one fund, right? There's a fund called SPY, right? That's the one I showed earlier, which has an average of more than 20% performance in the last 10 years, right? 10, 11 years. So when you buy this stock, right, you can buy it like a stock symbol, right? Instead of buying Apple, now you buy SPY. So when you buy SPY, inside this SPY, it has the top 500 stocks, right? It's managed by a fund manager. The fund manager will have to buy these 500 stocks based on what we call the index composition, right? This SPY follows the S&P 500 index. So let's say it says 2% is Apple, right? Then the fund manager will use the entire fund, 2% of it to buy Apple. So you are already naturally diversified. However, the SPY consists of the good and not so good sector. What I meant is those sectors that are also impacted by the COVID-19, but it's very heavily heavily weighted on the technology and the finance sector as of now. So you're still okay. But if you understand, if you can time it with a stock chart, right? I would prefer that you go for QQQ, will give you better performance, because QQQ is the top 100 stocks listed in the Nasdaq Stock Exchange, primarily tech stock. Okay, is the performance for the last 11 years is double the SPY. Just that you know that this is tech heavy. So during the 2018 tech war, right? So it is more impacted. But overall performance, if you keep it on the longer term, it is still outperform the S&P 500. Yeah, so that's one way you can do it. So there are many sectors. It depends on which one you're familiar. For each of the sector, like finance, consumer staples, which is those essential goods. Then there's consumer discretionary. These are also called services. That means the services industry, airline industry, those are in there. Then you also have utilities, right? Healthcare, the real estate investment fund. Yeah. If you ask me, if you are more looking for growth, then you go for QQQ. Okay. If you want stability, then you go for the consumer staples, right? In bad times, consumer staples do well. In good times, those more aggressive growth fund will do well. Yeah. So it depends on the timing. Yeah. Yeah. So I hope I answer the ETF question, right? It's just a fun. Yeah. But I would suggest that at least you learn the timing, right? Learn the technical chart. When is a low time to buy in? You cannot really research fundamental of ETF because it's not a company, right? So you basically have to rely on the stock chart for when the stock pull back and when to get back in. Yeah.
We've got more questions on what is the best industry, this and that, things that you've already covered. And correct me if I'm wrong. The gist of it is to be familiar with the industry that you're wanting to invest in. There's no fixed industry. I mean, you did say tech is a good idea, definitely, but there's different type of tech as well. But as long as you yourself are familiar, right?
Yes, yeah, because I'm from IT background, so tech is definitely something I'm very comfortable with. And having invested in tech shares for a long time, of course, software is a good one. It has a high ROI, right? No hardware involved. The more people buy, the more they make money. Yeah, but there's so many software companies, right? Just need to make sure that you do your due diligence, right? It's technology also changed very fast, right? So you need to understand as you invest in a company and he has a competitor, right? Then it may cause some problems to this company in terms of long-term survival. Yeah, that's something you need to know. So that's why for beginners, investing in exchange traded fund, like a group of tech shares will be a easier way rather than an individual company. But I highly encourage people to learn it, right? Because then this is a very lasting knowledge, right? And it can help you to make money, and it can even pass on to next generation. Inflation. Yeah, spend some time to learn about it. That gives you confidence. Even if I ask you to buy this ETF, how much will your confidence be? Right? I'm sure you have a lot of fear. Oh, is it the right timing? What if the market go down? What if this happen? Then you have a lot of fear. But when you understand it, the fear go away. Just like what Warren Buffett say, right? Fear comes from not knowing what you are doing. Yeah. Okay.
Yeah. We have a question about gloves, something that was a hot topic a while ago, died down a little bit, but we have a question. Can you address it about investing in gloves?
Okay. Yeah, so I think for glove, right, it's more a temporary industry to invest in. It's not long term. It's more to take advantage of the high demand for the interim. But I think the big uptrend, right? Don't expect the big surge due to the COVID-19 is here to stay. Okay. For the meantime, once the vaccine is roll out, right, in another 1 to 2 years, the demand may still be there for at least, because in the world there's still a lot of countries that has a lot of people being hospitalized and so on, right? The gloves are mainly used in all the healthcare industry. It may stagnate after a while. So one very important thing is when you want to invest, you should not look at the demand right now. You need to look at the demand in the next. If you're a long-term investor, right, will this demand will still be there, right, for the long-term period beyond a year? Okay, because stock market behave 6 to 9 months ahead of economy. All right. So after 1 year, when the vaccine is rolled out, right, is there still such a growth for the glove, or will it be saturated? Right. They may still make money, right? This is a making money industry all this while, but it may not. Don't expect it to make as much. Or should you rather look for those company that will have a more longer-term sustainable growth, and those are the companies that people will be willing to get into, right? And you don't have to worry about, when am I going to get out of my top glove or Harta Lega and so on, right?
Okay. So we actually have
Sorry, just want to touch up on that. But if you know technical chart, right, know the timing, just trade the trend according to those glove company, that's fine. Am I looking at the top glove chart right now, right? So if you know how to look at the chart, there's opportunity there, right, to trade the midterm. Yeah, not a long-term investment. I won't suggest this as a long-term investments because it may saturate after the vaccine roll out in 1 to 2 years.
We are actually out of time, but because there are so many questions, we will actually still answer 2 more before we end the session. So Ms. Kathlyn, the second last question is, how do Malaysians participate in the global investment market?
Oh, it's actually pretty easy, right? So first of all, when you want to open an investment account, right, a broker account, everything is online right now for the US broker. Of course, you can also go through the local institution. However, typically the broker fees, the commission charge are much more expensive compared to directly opening up account. So actually for our student base, we actually have a guide for them on step-by-step how to open up a broker account. And everything is through wire transfer. Even all the approvals is online, right? So the good thing is you don't have to go to US to open an account. Yeah. But however, you need to make sure that you understand what you're doing. I primarily trade the US market right now, although I started with the Malaysia market. I still monitor the Malaysia market mainly because a third of our students are from the Malaysia market base, and what we teach, right, actually can apply to any market. But I personally invest in US market because it has a lot of strong company. If you look at the top companies in the world, right, those strong companies branded, right, and all those day-to-day services that you are using, right, where does it come from? Okay. Yeah. So doesn't it make sense to invest in the US market? Of course, there are many more reasons for that. Yeah.
Yeah. Still on Andrew Wong's question, are there any brokerages that allow Malaysians to trade freely in any market? That is our last question.
Okay. I personally use Interactive Brokers. It's one of the largest online broker in the world. It doesn't have Malaysia market. It's hard to find a global broker that support Malaysia market. So if you want to trade Malaysia market, you still need to open up Malaysia broker. But for Interactive Brokers, at least, you can trade US, Europe, Hong Kong, except China, right? China's market is not so open up. Singapore market, Australia market, right? You can trade stocks, options, futures, and currencies in that broker. But I just want to highlight the Malaysia government doesn't allow online forex trading. Yeah, so it's considered illegal. Yeah.
Okay.
So this are the one.
Yep. All right. Well, we actually have a lot of questions. I'm right here on Malaysia Kini. We have even more viewers as well now. So just now we started off about 160 and now we're at 240 plus. It keeps going up and there's more people who are still asking questions, but unfortunately we have actually ran out of time. Now I have learned so much today, so thank you once again, Miss Kathlyn, for being here with us and sharing all your insights and also answering all the questions. If any of you are interested to learn more about global investment from Miss Kathlyn Toh, I'm going to give you some very, very good news. Okay, Beyond Insights, they host free webinars percuma, okay, where you can learn about the 4-step formula for a consistent and accelerated returns for your stock market. You can visit their website, as we've mentioned, beyondinsights.info/MK2021. For more information, you can scan the QR code as well on your screen right now. Additionally, you can follow Beyond Insights on their social media platforms as well to stay connected or get some educational content on investing and trading in the stock market. Once again, thank you so much, Ms. Kathlyn Toh, for being here with us.
Okay, thank you, Amanda, and thank you, Malaysia Kini, for inviting me. And I look forward to have more people learning about the stock market as well, because this is going to help you to overcome inflation and really, reduce the whole wealth gap. All right.
Yeah, definitely. And for those where we were unable to answer your questions, feel free to get in and scan there for the free registration. Perhaps you can ask Ms. Kathlyn there yourself next time. Until we meet again, my name is Amanda Andrea, your host for today. Take care, stay safe, and goodbye, everyone.
Okay, goodbye.